SEC respond to the Richard Hart motion to dismiss ETH ETF next week? The cryptocurrency market is buzzing with anticipation as the Securities and Exchange Commission, SEC, recently responded to Richard Hart's motion to dismiss. This legal battle could have significant implications for the cryptocurrency landscape, especially with the potential launch of an Ethereum ETH exchange-traded fund, ETF, next week. In this in-depth analysis, we will delve into the key points raised by the SEC, explore Richard Hart's legal arguments, and discuss the broader implications for small business owners and investors in the cryptocurrency space. Key points raised by the SEC. The SEC's response to Richard Hart's motion to dismiss is a critical document that outlines the regulatory body's stance on the case. One of the primary arguments made by the SEC is that Hart's activities may have violated securities laws, particularly with regard to the unregistered sale of tokens. The SEC emphasizes the need for regulatory oversight to protect investors and maintain market integrity. Another significant point raised by the SEC is the potential for fraud and manipulation in the cryptocurrency market. The regulatory body argues that without proper oversight, investors are at risk of falling victim to fraudulent schemes. The SEC also highlights the importance of clear and transparent disclosures to ensure that investors have all the necessary information to make informed decisions. Richard Hart's legal arguments on the other side of the legal battle. Richard Hart's defense team has put forth several arguments to support their motion to dismiss. One of the key points made by Hart's team is that the tokens in question do not qualify as securities under existing laws. They argue that the tokens are more akin to commodities or utility tokens, which should not be subject to the same regulatory scrutiny as traditional securities. Hart's legal team also contends that the SEC's approach to regulation is overly broad and stifles innovation in the cryptocurrency space. They argue that the current regulatory framework is outdated and does not adequately address the unique characteristics of digital assets. This, they assert, creates an uncertain environment for entrepreneurs and investors alike. Implications for the cryptocurrency market. The outcome of this case could set a precedent for future regulatory actions in the cryptocurrency market. If the SEC's arguments prevail, it could lead to increased regulatory scrutiny and enforcement actions against other cryptocurrency projects. This could have a chilling effect on innovation and discourage new entrants from entering the market. On the other hand, if Richard Hart's motion to dismiss is successful, it could embolden other cryptocurrency projects to challenge regulatory actions and push for a more favorable regulatory environment. This could lead to greater clarity and certainty for investors and entrepreneurs, fostering a more vibrant and dynamic market. Why small business owners and investors should pay attention. Small business owners and investors in the cryptocurrency space should closely monitor this case for several reasons. First, the outcome could directly impact their investments and the regulatory landscape they operate in. Increased regulatory scrutiny could lead to higher compliance costs and potential legal challenges, while a more favorable outcome could create new opportunities for growth and innovation. Second, this case highlights the importance of understanding and navigating the regulatory landscape. Small business owners and investors need to be proactive in ensuring compliance with existing laws and regulations. This includes staying informed about regulatory developments, seeking legal advice when necessary, and implementing robust risk management practices. Actionable insights on navigating the regulatory landscape. To help small business owners and investors navigate the regulatory landscape, here are some actionable tips. 1. Stay informed. Regularly monitor regulatory developments and stay updated on changes in laws and regulations that may impact your business or investments. 2. Seek legal advice. Consult with legal experts who specialize in cryptocurrency and securities law to ensure compliance and gain insights into potential regulatory risks. 3. Implement risk management practices. Develop and implement robust risk management practices to mitigate potential regulatory risks. This includes conducting thorough due diligence, maintaining transparent records, and ensuring proper disclosures. 4. Engage with regulators. Proactively engage with regulatory bodies and industry associations to stay informed about regulatory developments and advocate for a favorable regulatory environment. Case studies and examples. One notable example of regulatory challenges in the cryptocurrency space is the case of SEC v. Ripple Labs, Inc. In this case, the SEC alleged that Ripple's sale of XRP tokens constituted an unregistered securities offering. The outcome of this case could have significant implications for the classification of digital assets and the regulatory framework governing their sale and distribution. Another example is the recent approval of Bitcoin ETFs by regulatory bodies in Canada and Europe. These ETFs provide investors with a regulated and transparent way to gain exposure to Bitcoin, and their success could pave the way for the approval of an ETH ETF in the United States. If an ETH ETF is approved next week, it could provide a significant boost to the cryptocurrency market and increase investor confidence. In conclusion, the SEC's response to Richard Hart's motion to dismiss is a critical development that could have far-reaching implications for the cryptocurrency market. Small business owners and investors should pay close attention to this case and its outcome, as it could impact their investments and the regulatory landscape they operate in. By staying informed, seeking legal advice, implementing robust risk management practices, and engaging with regulators, they can navigate the regulatory landscape and make informed investment decisions. As the cryptocurrency market continues to evolve, it is essential for stakeholders to remain vigilant and proactive in addressing regulatory challenges. Whether it is the potential launch of an ETH ETF or ongoing legal battles, staying informed and prepared is key to achieving long-term success in this dynamic and rapidly changing market.